Welcome everyone to Charts Focus One, where we teach you how to work hard and trade smart. Now, if you guys are watching this video without reading the market summary first, make sure you guys do that because what I'm about to say is relevant to what I've said earlier on in one of the paragraphs in the market summary. So make sure you guys are reading it from top to bottom first and then come back to this TA video. So before I say anything on SPY, and this is a weekly time frame, so we're going to start with the weekly time frame. Let me take out all my levels first. So we're taking out all the distractions. Now, the reason why we're looking at this weekly time frame is that, well, I want to compare SPY at a specific point in time, specifically the infamous 2008 crash. And if you go to this next tab here, okay, we're looking at the 2008 price action on a weekly basis, as we're also comparing another SPY chart on a weekly time frame. And there is a lot of similarities to this chart compared to the 2022 chart, and especially the 2022 downturn. And here's what I mean. So if you noticed, SPY, ever since it made a all-time high price point of 474.49. So this is the pivot high point here, okay? We've seen two more pivot high points right here and then right here. And if we use this kind of general guide, okay, where we are seeing lower highs, right? Especially 3 lower highs, and translate this to the 2008 chart, okay, you see similarities. And where is that? Well, right here. So right here, we made a high of 117.25. And then we made another significant second lower high. And then from that point forward, we made another third lower high here. So we have 3 pivot highs here where we saw the price going lower and making new lower lows at that, right? And so if we are able to translate this chart back to the current chart, okay, then we can probably assume that we're around somewhere at this point on the 2008 timeframe, right, on this perspective. So what's even better is that the 2008 weekly timeframe also had a line in the sand level of around $93.50 to $94. And in our current time frame, if we now bring back our levels here, we're looking at a line in the sand level of 362.50 or around 360.50 to 363. But if you want a specific level that I'm looking at, it's just 362.50. And this is just an absolute great guide on a technical scale and perspective, because if we are indeed around this area and this point in time with the current chart, then there's a big possibility that we can see weeks of bounce coming in soon, right? At the very least 2 to 3 weeks based on this 2008 chart. Now, obviously, you know, I'm not going to say that this will happen because, well, history doesn't always follow the exact past, but it's, you know, just based on what I'm seeing and what I'm observing on the weekly timeframes here, as I'm comparing these two, the similarity is literally uncanny here. So, you know, with the current time frame and current chart here, we're also seeing a potential double bottom or a W pattern, right? There's a possibility that we can see something like this happening in the next few weeks, right? So this is also indicative of the fact that, you know, it could happen because, well, back in 2008, we saw that small volatility, this week-to-week volatility, as it tried to make a short-term uptrend, as it bounced around this 93.50 level or $94 level, or in between that range, creating a double bottom or maybe even a triple bottom here if this pivot low is counted as well. So it doesn't really matter, right? Triple bottom, double bottom, they're essentially the same thing. They're inherently bullish. So it should also align, right? If we do see this bounce this week with the fact that, right after FOMC results are over and after Jerome Powell speaks in his news conference, we tend to see a short-term uptrend to the upside, right? So with that being said, okay, now let's take a look at the levels that we need to be looking out for. Okay, and let's go back to my mouse cursor. So on the daily time frame, right, we hit a low on last Friday at 363.29, and that's within, at the very least, it's essentially hit that 363 level between the range of 360 to 363, right? 360.50, excuse me, to 363. So I really wanted to see a retest of 362.50 exactly, but I would say this is pretty close. And if you do decide to bounce and move up higher and potentially have around 2 to 3 weeks of an uptrend, we could be seeing a higher low. And that's where I say that, history may not always follow exactly like has happened in 2008. Because if we somehow form this and keep this potential higher low here, we might just continue to move up, right? But obviously, with all the economic risks and everything that's been happening, as I've explained in the market summary for this week, it seems highly unlikely that that could happen, right? And that's another reason why that I wanted to compare the weekly timeframes of SPY right now and the weekly timeframe of SPY back in 2008. Now, with that being said, I am going to be looking out for a full gap fill of this gap down that we have between last Thursday and last Friday. So, it should also coincide with my analysis that I've just given you between SPY 2008 and SPY 2022. And usually, as I've said multiple times, SPY tends to fill its gap, whether it be a gap down or gap up. It will fill any type of gap. Now, the reason why I wanted to fill in the gap is that will initially start the bullishness or the short-term uptrend that we're potentially about to see in the next 2 to 3 weeks. Because when we fill in a gap, especially a gap down, that usually tells us that the sellers who've had control to make this gap down is now out of control, in the fact that they're completely out, and buyers are ready to come back in, right? It's going to give leeway for buyers to take back control and allow the price to move up higher. So in order for us to really start this uptrend and to fill in this gap, we need to break above Friday's high of 370.62. So this 370.62 or around 370.50, it's kind of the whole number level that we should be looking out for, will be the resistance area before we're able to break to the upside. So hopefully in the intraday time frame, okay, we're able to see higher highs and higher lows. Now, if you go on the 2-hour time frame, like we're seeing here, I love this candlestick, right? And this candlestick right here is a nice hammer candlestick, and hammer candlesticks tend to form at support levels or support areas or demand areas, and it signifies a reversal. Okay, so with this hammer candlestick, it's a perfect formation at a perfect point in time and perfect area as well, which is the reason why I believe that we can have a nice short-term uptrend in the near-term future, right, in the next couple of weeks. So this 370.50 area is very, very significant for us to break out of in order to start filling this gap. Now, the thing that I want to see is a chart pattern like this, right? As we're seeing higher highs and higher lows, potentially forming a nice ascending triangle chart pattern on the intraday timeframes or the hourly timeframes, right? And this 370.50 level will be the significant level that will determine whether or not we want to fill in the gap and start and give leeway for bulls and for bullishness for the next upcoming few weeks. Okay, so if you want to see a continuation of this 370 of the price to go up to 370.50, we need to break above this candle's high, which is at 368.23. So that means we need to stay above 368 and continue to use 368 as support. And so if you want to see that as a visual, okay. Oops. Let me make sure that I have my levels here. There we go. Okay, so on the intraday time frame, this 368 level has to be broken upward in order for us to continue to head back to that 370.50 level. All right, so that is a complete breakdown of what I'm expecting on SPY long term and for this week. All right, so our first name is Wolf. Okay, so I'm looking at this name once more because I love the fact that it's showing two different opportunities. And for the fact that it showed great strength on Friday when the overall market was selling off, it's just absolutely amazing that the overall strength that this one has. And the fact that we've bounced at a previous level of support at 105.50. And I've also acknowledged this in the past as well, because we saw these two pivot points from these two doji candlesticks, or dragonfly doji candlesticks, right? These are reversal doji candlesticks. And for the fact that we are also adhering to these candlesticks here, and the support level just gives me more of a confidence that this one should be able to maintain its gap that it made from earnings reaction, right? So if we're able to hold above 105.50, we should be able to see a long entry above $111, and that should take us to at least, okay, if we go back to our time frame here, at least to 113 or 114 max. Okay. However, if we're able to sustain this 105.50 support a lot longer than I expected to, then we're most likely going to be staying inside, and we're going to be within the price range of this flag that we're making after that earnings gap up, or we can also call this an earnings flag, right? So if we do indeed start to stay inside this flag once more after breaking below it, we should be able to come back to the upper range of this descending level of resistance, right? So if you go back to the daily time frame, there are also potential short entry that I've given to you guys as well, because if we decide to reject during any time of this week, or maybe in the middle of this week when Jerome Powell is speaking again, okay, then there'll be a great time to start shorting this name from a green to red situation, okay. All right, so the second name here is CELH, or Celsius Holdings. So this is the infamous energy drink company, okay? And this one has been showing some absolutely great strength as well, along with Wolf. And this one is pretty interesting because if you take a look at the weekly time frame first, you can clearly tell that there is some sort of a cup and handle chart pattern forming. And that tends to happen when we're, staying near all-time high prices and still staying in an uptrend in an overall macro perspective. And on this weekly time frame, you can clearly tell that this name has been continuously being bought up, even if the market has been going down. If you take a look at SPY on the weekly time frame, we've been just straight up going down, right? And on CELH here, ever since summer started in 2022, we've been going straight up. So CELH here, we have this macro curvature here, which consists of the cup and the cup and handle chart pattern. And we're starting to see the formation of a handle on this cup and handle macro chart pattern. So if you go back on the daily time frame, we're looking at also a micro falling wedge, which is also part of that handle in the macro cup and handle chart pattern. I apologize for all this linguistics and different technical words, but I just want to make sure you guys are able to see what I'm seeing as well in detail. So with this micro falling wedge here, I expect us to continue to move up to the upside and kind of follow that same price action that I was talking about with Wolf here, if the price decides to stay within this wedge or pennant bull flag here, or earnings bull flag. So with CELH, I expect the same thing. Since we did see this bounce on this descending level of support that consists of this, or with that makes up the falling wedge chart pattern here. So if we're able to break above $88 and hold above $88 this week, I expect this name to continue to move up to the upside and potentially retest 94.50 or at the maximum retest this upper range or this descending level of resistance. And if that does happen, then we will be able to retest the daily 50 SMA again, right? Since we just broke below it. All right, so our third name is lows, okay, or LOW. And LOW is also showing a falling wedge chart pattern. Now, at this point, you guys should be kind of be able to tell the pattern that I'm looking for here. And basically, I'm looking for bullish chart patterns like falling wedges, and I'm looking for relative strength. Okay. Now, the reason why I'm doing that is that, well, like I explained earlier, SPY showed a very, very good bounce, right, on that line in the sand level or area. And so if you continue to see demand in the market coming back in, then expect the relative strength names that are also showing simultaneous bullish chart patterns like low, CLH, and Wolf. We should be able to see some very, very nice short-term uptrend breakouts. Okay, and low is one of them as well. And low here is showing a very, very nicely formed falling wedge. And if we're able to break above, okay, if you go on the 2-hour time frame, okay, if you're able to break above around 188.50 to around 199 as a whole number level, if you guys wanted to keep it simple, then we could be seeing a very, very good breakout until we revisit major intraday levels, resistance levels are around 190 to 195. Okay. So make sure you guys have your alerts set up because this one will be a very, very, very good catch if we're able to break above 190. Okay, and that's your confirmation level that I've given you guys in the newsletter as well. All right, so our fourth name here is Snow. Now, you know why I love Snow because of its relative strength, right? It showed immense strength back in this area in early September. So right now, it's back at the 50 SMA and this 166 support level. And it's also coinciding with this ascending support trend line. And this ascending support trend line is a part of a macro ascending channel. So overall, this is a very, very large potential bear flag because an ascending channel is essentially inherently a bearish chart pattern. But if I was to bet that this name continues to show strength, especially if the market decides to bounce as well this week, then I'm going to expect this name to continue to move to the upside before it rejects at 182. So this is also a great target for this week for Snow if it decides to continuously move up. So 182 will be your minimum or maximum profit target depending on your entries for this week. And so if we do see a revisit of 182, then that's where I'll be expecting a rejection, and potentially that can be that pivot high point or the lower high point from this specific high of 203.62 on this candlestick. Okay, so this candlestick can also be called a inverse hammer candlestick, or people like to call it hangman candlestick. There's a lot of different names for this one, but I'll just stick with a simple inverted hammer candlestick, which is bearish. And how do you know this? Well, just take a look at the evidence here. All right, after this inverted hammer candlestick formed, we just continue to move lower until we hit that lower range of this ascending channel. All right, so our fifth name here is BBY or Best Buy. Now, I think this is one of the simplest and most easiest name that you can trade for this week because, well, like I said in the newsletter, this one hasn't broken out of its base yet, right? And as you've seen in multiple tech companies and retail names that have made these big macro bases, they've broken to the downside with volume, right? So this one still hasn't done that yet. So this one can be considered a lagging name. And with retail, prospects showing more bearishness into next year as the economy slows down and growth slows down, I expect Best Buy to continuously do bad. So with that fundamental analysis in mind, BBY on a technical perspective, it looks bearish as well. So this one will be a very, very easy name to trade, I believe, for this week. Probably the easiest out of all the names here so far. As if we do decide to continue to move up, then you can wait for a simple rejection on this descending level of resistance, which is also giving us a macro descending triangle chart pattern here, right? With the neckline or support level around 67.50 or around 67 whole number, right? So if we do decide to move up anytime earlier this week, maybe even tomorrow, you can wait for a rejection at $70, right? And this $70 level, okay, can be a very, very, very significant level of resistance, especially if it coincides, if it happens to coincide with this descending level of resistance. Okay, and that's the reason why I gave you guys a nice short entries here to the downside of a rejection at 70, but for a confirmation of a continuation to the downside, I'm going to expect to see a break below the $67 level, right? So obviously, if you guys want to see a nice range of support or a demand area, I would be looking at 67 to 67.50. Okay, so our last name here is Amazon. So Amazon showed a great intraday price action, as I've basically shown you guys on Friday, minute by minute, and on the 15-minute time frame, right, where we saw that descending triangle right here, and that amazing break below 130.50, but we got that confirmation when we continue to move below 113 whole number. So on the 15-minute time frame again for Amazon, I'm going to expect to see more uptrend for earlier this week because we ended up, first of all, on the 15-minute time frame with this dragonfly doji, which is a reversal candlestick and a bullish one at that as well. So with this great bounce at 112 on Friday, and it was also a great significant support in the past back in mid-June and mid-July. I expect us to hold this 112 support level as the market hopefully continues to go up higher and fill in the gap, which could mean that Amazon can move big. Okay, and our maximum profit target for Amazon for this week could be around 120, which is a previous level of resistance and support back in mid-July and mid-June. Okay, so around this area. So watch out for this 120 level, because if we do start to move really quickly along with the markets, this name should continue to move up higher along with the markets as well. So on the 2-hour time frame here, okay, before we end the video, we need to see, absolutely need to see a break above 115. And you guys should be able to see that on the 15-minute time frame as well. So this 115 level should tell us whether or not we want to fill in the gap that we made with Amazon as well in this 2-hour time frame between Thursday and Friday's price action, right? So we need to be able to break above 115. So that means we need to make higher lows as we continue to move up higher, so that we can have more buyers coming in as they're more confident with those higher lows on the intraday time frame. Okay, so that is it for this week. I do not have any cryptocurrency picks for this week. We'll continue to focus mainly on equities, and we'll be focusing only on these 6 equity picks for this week. Okay, make sure you guys are laser focused this week, because we have a lot of economic data coming in, and we have Federal Chairman Jerome Powell speaking on Tuesday and on Wednesday, even though I would say the latter on Wednesday is more important than Tuesdays. Okay, so he'll be talking back to back, so we should be ready for any type of volatility. But with volatility comes a messy and busy brain, which is the reason why we should be looking at only a select few names, which is the reason why I've only chosen 6 equity picks for this week. All right, I'll see you guys in the Discord tomorrow. Have a great rest of your night and good luck.